All right, let's go ahead and get into the stock market technical analysis. We're going to look at the broad markets, especially the tech sector. We have all the major cap tech stocks earnings are out of the way, except for Nvidia, which doesn't report for a couple weeks. But we have the rest of those. So the market is now free to basically make its decision on where it wants to go without risk of large cap tech, pushing that one way or the other. So let's dive right into it. If you guys are finding value, please drop me a thumbs up. It's just a quick little click of that button. It does help the channel. I do appreciate that. Encourages me to keep putting out the videos. And then if you're in addition, if you're interested in market trades, additional market insights, additional charts and setups, I send those out to my private member group. Check it out. Link in the description below. $5 a month. Cancel anytime. I think it's a pretty fair deal. I put out several trades this week in that private member group, and many of those paid basically 13 to 17% basically, and multiple trades there. So check that out if you're interested. Okay, triple Qs. We've got here's what I'm looking at. The key things I'm picking up on this chart, and this is really the most important things to me until they change, is one, bearish engulfing candle on the daily chart right there, marking the high or the potential high. When you see a bearish engulfing, those are topping candlesticks, and that was a topping candlestick until proven otherwise. To prove it otherwise, you would really need to see kind of a daily close above that, breaking that as the top, and we haven't seen that yet. So that is the top, all right? And that's been the top since July, and that is true, all right? Regardless of, all we know is what we know as of today. The top has been in since July. We went down, rallied up, but we haven't broken that. The other thing, so that's key to hold that key level, and really the top of that, it's about 503.40 or so. Okay, then we also put in a bearish rising wedge right here, all right, on this pattern. This is the grinding pattern. We put in this bearish rising wedge. That's a bearish pattern that we look for a break to the downside, and also we have been basically building negative divergence for a while, really through here. This bearish rising wedge, it's been building negative divergence, especially right through here. If I just kind of zoom in on the wedge, and you can see recently, all right, you can see right here momentum has been dropping and we've been wedging higher. So that's really it, those key things. Now yesterday, ahead of the Apple earnings, essentially, obviously people were saying, hey, let's take risk off the table. Why wait for Apple? Let's take some risk off the table. And that's exactly what happened. We broke to the downside of that bearish rising wedge. That is a sell signal all day long, okay? That is a sell signal. It's clear, crystal clear, all right? A very definitive impulsive selling is what I talk about. You want to see a break of support on impulsive selling, not just kind of light selling, and that's exactly what we got. So now the widest part of this wedge is about there, and we take that to the point of the breakdown, and that gives us our major target, which I see as basically a push down to the 200-day moving average. All right, I think we're going to fall down there, test the 200-day. The bulls, we should get a bounce there. All right, for one, it's the major target of this move, so we should likely run, people shorting this wedge will have hit their major target, and they'll look to probably start covering, and then bulls will be at the 200 simple moving average, and they'll say, hey, let's buy at the 200. So that's it. I see that as a bounce target. But bigger picture, and I've talked about this, if we get down to that major target, all right, in the 200-day, we will have broken major uptrend support. If I roll out, this is the daily, all right, and here's the January 2023 lows in triple Qs. This is where we've basically been rallying from, so you can see support. I've got it marked out. There's another reaction. And as I move in, a little overshoot here, but we still closed right on it, so that counts. And then there's another one there, and that is the longer term uptrend line. Sorry guys, trying to grab this other tool. The longer term uptrend line. So we will have broken that if we get down to that 200-day. All right, it will. There it is, right there, and that will be a break. So the way I think it's going to go, just to give you just how I read the charts as of right now. Of course, things can change. Today, little relief rally, but I suspect it's just going to be an inside day, meaning that pretty much this big sell signal will be in place, and we'll just have trading within that candle, which is a continuation candlestick. It typically tells you that the trend will continue. Right now, the trend was up. The trend broke yesterday. That's a break of trend. Inside day today, and we continue to the downside. So I think we'll head down to this trend line, which is the major trend line. I think we get a little bounce there. All right, maybe a bounce. There should be a reaction at least, and then ultimately we break down to the 200-day, and then from there we'll probably bounce and do a back test of that trend line, maybe for a couple weeks or maybe even a couple months. It's hard to say. So I think that's how it goes. Maybe there might not even be a bounce at the trend line. I think there's a reaction. I think we've just fall and maybe even hold. I don't know if I'd be expecting a bounce. I'm probably not going to be trading it looking for a bounce. I'll probably be just kind of ride it out and look for the breakdown, potentially add to a short on the breakdown down to the 200-day, and then cover down at the 200-day. Okay, that's my plan as of right now. All right, Amazon. So they're kind of holding the triple Qs up today. And then Apple's kind of the anchor. So that's why I think we'll have an inside day. It's just kind of opposing forces. But Amazon's up a lot more than Apple's down. But here's Amazon popping up on earnings. One thing I'm watching for, so you can see here's a former high, and we're popping above that high, making a new higher high in price. Momentum's not there yet, though. We still have negative divergence, especially here on the PPO. So I'm watching for that. Does the momentum show up, and do we, so far in the RSI, momentum's pointed up. So if we just keep going up, we're not going to have negative divergence there on the daily, and could mean we could hold up and keep going up in Amazon. So something just to look for. Does the momentum start to turn down and we put in that divergent high, meaning this is a divergent high after earnings likely to get sold into next week, or does momentum continue higher and we haven't hit, this is not a divergent high. It's kind of a, there's still strength. So something to watch for there. For me, there's nothing to do here on Amazon, just kind of watching. And then Apple, bigger picture, Apple, not today, but yesterday actually broke trend. So here's support, that's your uptrend line, and there's the breakdown. That's a sell signal. Today, gapping down pretty much right at what I can tell to be a level of support, which is about 221.31-ish, somewhere right in there. About 221.30. And, so hitting that support, and so it makes sense that we saw a little bounce this morning off that. They're selling back into it, but I do suspect it probably holds today. Maybe another bounce early next week, and then ultimately we probably continue to roll over because the little uptrend line right there has been broken. So something to watch for. Also on Apple, here's your all-time high, and here's kind of your former equal high right there, but clear negative divergence. All right, momentum clearly dropping off. So I believe this negative divergence that's really developed on the daily chart over a long time is signaling that Apple is going to push all the way down to the 200-day and ultimately take out the 200-day, but for now probably push down to the 200-day. And then the other one, I think that Tesla, bigger picture, today's the day. It's got to kind of prove it if it's going to be a breakout. Here's the weekly chart. You're in a downtrend line on Tesla. That resistance, and there's another reaction, and we're basically still below that resistance line. They did a little pop last week, but this week failed, and we're still back below it. So as long as we're below that resistance, the trend is down, and then simple as that. All right, so, and then this one I'm watching for a trade. It's a short setup. Meta, clear negative divergence on the momentum. All right, and it's been building for quite a while. Look at the PPO. You can see just, lower lower momentum, and a big bearish rising wedge. All right, pretty sizable bearish rising wedge. We're at the apex of the wedge. We could, you know, we can grind in here some more. So that's something to watch for. There's no actionable trade yet, but it's definitely on watch. All right, I'm looking for it to break, ultimately break this uptrend line, and there's some horizontal support right about 563.24. You can see today, dip down. That's exactly where the buyers were sitting at. So for me, looking to short this thing because of the divergence and the bearish pattern, I want to see impulsive break of that 560, you know, that 560 whatever the level, 562.30 or whatever, 563, right in here. Okay, I want to see an impulsive break, a gap down or something would be the sell signal, and if we get that widest part of the wedge on this one, which is a pretty sizable wedge, puts us at, you know, way down here, 361.80 or potentially down to this 330, 327, 330. So that is what I'm watching for on Meta, and that is yeah, that's it on the Mag 7. All right, trade ideas and just some other interesting things I want to point out. Oh, and then also let me go to the SPY real quick. I sometimes skip that one. There's the SPY. So clear bearish rising wedge. The SPY put in a new high. So there's your high, and then we put in a new high, but clear negative divergence. All right, divergent high indication. That's an indication that it's going to get sold into. And sure enough, you had a bearish rising wedge, and we got the break of the wedge yesterday. And I did adjust my wedge. All right, I talked about that in a video. I previously had the wedge kind of like that because I captured a lot of reactions. That wedge still broke, so I figured, you know, if you had that wedge, it broke and you were waiting for the triple Qs. If I move it down here, I got another wedge, and it basically that broke yesterday with the triple Qs. So either one, they're both broken. That's the point with the negative divergence. So again, should see some selling. Now, the widest part of the wedge on the SPY, and this is where likely the market's going, is down here, down to 538. All right, we'll call it 538. You can see the 200 days moving up, so I think they'll come in together, and that's where the buyers should be sitting. So, yeah, I think we've got a drop as of right now, from where we're at right now, a drop of about 6 3/10% in the S&P 500. Before the buyers really step back in. So personally, what I'm doing back on the triple Qs, I'm adding to some shorts on the rallies today. I'm in sell the rip mode. So today, you know, they want to do a little counter trend bounce and rally it, pushing it up in the morning, likely to sell it off in the afternoon. I'm adding to some shorts. All right, that's how I'm handling it. Costco, this one, again, here's support. There's another reaction. So next sell signal on Costco comes on a break of 873. All right, we'll call it. Otherwise, maybe they're going to push it back up into the downtrend line. So there's no short right now on Costco. You need to see that support go before more downside. Or you can short it at this resistance. This looks like a pretty clean downtrend line resistance. So rally there is a short. Otherwise, break of support is a short. Okay, FITB, again, set up for it's a short setup. Big bearish rising wedge, big negative divergence that's been building for quite a while, and this one's ripe to break down. It's probably going to come on a gap down. As of right now, it's just sitting right there at support. You can see it's just it hasn't broken support, and it's just right there. So maybe it happens today, during the regular session. Usually, when you see pretty mature patterns like that, and they're so obvious, the breakdowns come in the form of gap downs. You trap long, so that's what I'd be looking for. And then the widest part of the wedge on this one is way back here. That sets us up for a move, if we break soon, down to 32. So I continue to talk about this trade because it's a very good trade setup. It just hasn't triggered yet. Couple short setups in gold miners. Again, gold I think is in for a sell-off, especially the miners. This one is KGC. You can see here, big negative divergence. It's just kind of rinse and repeat, basically. Most of the market's just been kind of rallying and wedging up, and we've seen that across the board. And here it is, bearish rising wedge, negative divergence, no sell signal. Yesterday, or came close to that support, so still waiting for the breakdown of the wedge. If we get it, widest part of the wedge, is, yeah, I got it right about here, which gives us, depending on where we go, is a push down to the 200-day moving average. Go figure. So it's kind of what we're seeing across the board is moves down to the 200-day. Yeah, and that's what I see on that one. And GDX as a whole, this one basically, you can see here, bearish rising wedge, negative divergence, sitting at support basically without a break of the wedge. If we get a breakdown, you take the widest part of the wedge at the point of the breakdown. And this one actually sets us up for a move down below the 200-day move average if we break down soon. So it's hard to say whether we're going to get the breakdown now or if it comes in the future. So again, that's why we just sit and wait and watch. But definitely short setup, so keep an eye out on these gold miners. They'll likely all move at the same time. Okay, and to wrap up, I was looking at the CME group, the Fed Fund futures. We pretty much got a 25 basis point rate cut priced in at this point. So that's what the Fed's going to do. That's basically what it is. Fed's going to cut 25 basis points next week, and then we'll see how the market reacts. Going back to the charts, bonds obviously didn't like the last time the Fed cut rates because the Fed cut rates last time basically right in here, and they did nothing but sell those bonds. So rates have been rising, and so we'll watch that. This is key. I'm looking at their, today, bonds are continuing to sell off, which means interest rates are continuing to rise. So in general, the bond market is not liking the fact that the Fed is cutting rates. You can see here's the 10-year interest rates. And, rising. Haven't quite broken out. There's a little kind of resistance right up here. But we see a pop of this, the market's likely going to continue to freak out. So I think that's what's going to happen, given the market setups. I think the bonds are going to continue to pop, maybe on the Fed day next week on Wednesday, and maybe not. But I think the interest rates continue to rise as the markets kind of come in. And then we'll see the bonds likely, then we'll see people stepping in and buying bonds. So that's pretty much all I have. I'm going to be out of out for this weekend and not available to really put out videos Monday through Wednesday next week. I can probably put out some private member posts, but likely no videos. So I will catch you guys when I am back in town. All right, take care.